So it's an increase of as much as 42% in first half headline earnings per share that we're anticipating. Has it come as a surprise to you at all?
I don't think so. I think the market was pretty much expecting it. Maybe a slight positive surprise in terms of the actual revenue that they managed to generate, because we got indication from them that there was definitely cost pressure. We know of the first quarter, the rainfall that sort of negatively affected their production, and also of high stripping ratios at their Sishen mine, which obviously all sort of affected cost negatively. Saying all of that, you know, these guys are currently producing in an environment which is exceptionally strong. You know, the latter part of the cost curve, the marginal part of volume, is actually dictating prices at the moment, and these companies, with them sitting at the lowest end of the cost curve, are making an absurd amount of money.
Before we go into prices that we're looking at and sustainability of that trend, what kind of supply-demand dynamic are we looking at in this industry?
100%. Yeah, supply at the moment, and especially on the shorter term, are lacking. I think it's not coming through as quickly. We're hearing various issues of producers globally that the numbers given out may be too optimistic. But I think in general what the market is sort of pricing in is the prices to peak this year. You know, obviously we had the soft patch in China throughout the middle part of the year, but they are expecting prices to firm up again towards Q4 of this year, and then also to sort of stay relatively strong into 2012. From a supply-demand perspective, they are seeing the market sort of to trade on balance and in a slight surplus during 2012, i.e. next year, and then from there on increasing. I mean, you're sort of looking at demand growth, supply growth of about 25% over the next 3 years, which is quite a strong supply response that we are seeing.
Yeah. Taking a look at prices now, I mean, you mentioned that you're expecting it to peak this year. Peak at what level exactly?
If you look at the sort of the fine price and you sort of look at maybe the export out of India into China, the CIF price, around about $170 a ton, and then from there on, I guess, going lower towards from 100, I guess, down to even $70 on a longer term basis, i.e. about 5 years out.
It's that price that's been supportive of the business and the kind of numbers that's filtered through this morning and what we're anticipating for the first half. Let's quantify the cost of the strong rand, because while it has been cushioned by these higher prices, it is still a factor that a company like Kumba Iron Ore has to contend with.
100%. I mean, all these miners would love a weaker rand, you know, but I think in general, and as we've seen, you know, the currency relative to the commodity prices always has sort of that offsetting effect. You know, it's rare that you actually find that you got a massively depreciating rand and much stronger commodity prices, because I guess it comes back to the question: how much does the dollar and strength of the dollar actually dictating other commodity prices? And you know, and obviously in iron ore it's more difficult. You know, you don't really sit with a lot of physical spec investment, opposed to people can warehouse the stuff and so on. But there is definitely a great extent, I think, of negative correlation to currency.
Let's take a look at Kumba specifically, because you know, we've been having debates at the desk on whether investors should vie for diverse stocks as opposed to single commodity stocks. Is that a risk that's inherent with a company like Kumba Iron Ore, the fact that it's a single commodity stock?
Look, you know, it's definitely a risk. I think the textbooks will tell us, you know, diversification in the end of the day pays off. You know, if you're at the right time in the right commodity, you can do exceptionally well, like all the investors have done in Kumba. And still, you know, looking 3 years out, this company is still sitting in very attractive dividend yields of about between 12 and 14% even. And you know, it's in a very good spot, but the risk, as I said, is always there. You know, it obviously is it requires a fairly strong steel demand, and for that to happen, you need a sustainable global growth picture to play out, or scenario to play out.
With that being the risk then, and that possibly one of the reasons why investors would shy away from a stock like this, do you see Kumba at all exploring other avenues and looking to diversify its business?
No, not at the moment. You know, I think maybe in other countries, but not going away from just, diversify away from iron ore. I think, if you compare Exxaro maybe to Kumba, which a lot of people would argue has sort of lagged because it's got a material part of its earnings is also coming from the Sishen mine, and they've also sort of saw the benefits of this higher iron ore price. They are obviously a lot more exposed to coal, which diversify obviously that exposure, and in my view sort of gives a better entry to this type of the market.
Let's unpack a couple of challenges for industry players here. The first is the protection of property rights, and we know that there's a dispute currently underway with regards to Kumba Iron Ore's Sishen mine. It's a cloud that hangs over. How much of a concern for you?
Yeah, it's always a concern. It's uncertainty, and I don't think investors enjoy uncertainty. I think it's a risk. But it's probably something that's going to take longer to play out than one think, and I guess it's uncertain which way it will go. I mean, there's so many arguments to either side, but I think one thing is for sure is that you'll probably see this being dragged out for longer, and for the interim, sort of going, at sort of a midway, if you want to call that.
And then we've seen the strike season start. Platinum miners, gold miners, all coal miners being caught up in the fray. Do you see labour costs becoming an issue more so moving forward?
Yes, I mean it's something that's very relevant for all the concentrated SA miners. Doing a 10% increase a year, and from there on again, sort of falling back to sort of 6, 7 is okay. But you have 10%, 10%, 10% each and every year. It's tough to sort of argue for that, and that any company can make a sustainable story to any company. I think. What you would likely see is for companies like Kumba Iron Ore, which are making sort of absurd margins at the moment, they are more likely to give in for now. But I guess the question comes when iron ore revert back to sort of long-term levels.
Precedent's been set.
Then it's there and it's in the cost base. So it remains a huge risk, I think, for SA miners.